All right, now I think it's time to go for solving on our topic.
Okay.
Five non-current assets held for sale and discontinued what? Operation. So let's get busy.
Operation.
Yes, you see, it's just a simple topic, yeah?
Yes, it's connected to PPE. It's connected to
Yes,
to inventory
yeah.
and a bit of IP,
Okay, that's good. Great, great.
investment property.
Okay, now
Yes.
let's read the questions. The question, okay, it's just a short question. You can, if the question is short, you can just read it from up, right? But if it's long, you have to know the
Okay.
requirement. Okay, we are told that
Okay.
on 1st January 20x4, Manu Limited bought an equipment for $18,000, right? Then
Okay.
it has 18,000 what? Dollars. It has an
Dollars.
expected useful life of 10 years and a nil residual what? Value.
Value.
At June 26, which was like it was like 2.5 years, right? Because whole of 20
Uh,
whole
for
of 25 and a half of
five.
26, right?
Yes. Two
Yes.
years, 6 months.
Yes. And so we are told Manu Limited decides to sell the equipment and they starts actions to locate a buyer. You see that?
Okay.
Whatever way to see, you say that, okay, it decides to sell the equipment. So you could say management is committed to a plan. You do you remember those conditions for assets classified as held for sale? We say the assets
Yes.
should be ready for sale. Nothing we have seen so far that refute that. We say that the sale should be highly probable, which means that management
Yes.
should be committed to a plan to sell, and we are told here, right? Manu
Yes.
Limited decides to sell, so it shows that it has a commitment, right? And it starts
Okay.
action to locate a what? A
A
buyer.
buyer.
So, so maybe we presume that we will sell the asset at a price that is reasonable, which is that is fair, right? But we are yet to see.
Yes.
So all these points you should note and remember that they are in the what? Accounting treatment, and they are what you should specify in the exam so that the examiner knows you know what you are doing. It's not like you are just trying to test, right?
Okay. Yes,
Okay,
sir.
so these matters you should say them. Yeah, they decided there are actions to locate a buyer. Okay, the machines are in short supply, so Manual Limited is confident that the equipment will be sold fairly quickly. Don't you see? It shows that the asset will be sold. It is probable that the asset will be sold
Within
in the
1
next
year.
12 months. You see that?
Yes, sir.
So
Yes, sir.
the weddings you see, you have to connect them to the principles you read. And
Okay.
even if you have to
Okay.
solve only, let me tell you one thing. In accounting, you have to show the accounting treatment, not just the solving, not just the numbers.
Okay. Okay,
Yes.
sir.
And then you are told its market value at 30 June 2026 is $14,200, and it will cost 900 to dismantle the equipment and make it available to the what? To the purchaser. This should be
Purchase.
the cost to sell, right? This should be the fair,
Yes.
and this should be the cost
Yes.
to sell.
To sell.
Yes.
Yes.
So we have it and we have it. Okay, then you are told the
Okay.
equipment has not been sold at the year end. It has not been what? Been sold. Okay, we don't know our year
Been
end
sold.
now, right? We don't know our year end.
Yes.
Okay, what are we told now? At what value should the equipment be stated in Manual Limited Statement of Financial Position as at the 1st December 2026? So it's at the end of its third year, right? 20x4,
Yes.
20x6. So it's like 6 months is after being classified as held for sale, which was 30 June 2026. At what amount should it be presented? Okay,
Okay.
now let's go for it. So just like we said, you have to state that first of all, you classified it as held for sale on 30 June 2026. So until then, you have to classify it as a normal PPE and IS what? 16. Right? So
Yes.
in an exam, you
Yes.
specify, I'm going to use IS what? 16
16.
to deal with this, to treat this asset. So obviously you can see you have to get the depreciation, right? And how do you get depreciation? We know the depreciation, how to get it. It's the cost, which is 18,000 minus residual value, which we found it was nil, over useful life, which is 10, and you have 1,800.
800.
The classification was on 30 June 2026, which, if you count from 1st January 2024, it's 2.5 years, 2.5, or 2 years, 6 months, is like you said, right?
Yes.
So you have to get the accumulated what? Depreciation. Which is this one, depreciation per year, 1,800 times 2.5 years. 1,800 times 2.5 is like 900 times 5, which is 4,500. Okay, this is fine. This is accumulated what? Depreciation. So if you deduct it from the cost, you would get the carrying what? Amount at 30 June 20x what? X6. Right. The carrying amount at this stage, right?
I'm a bit lost.
Where did you get lost? We had your asset the cost of
2016.
Yes.
2014 to 2016.
Yes.
It's 2 years. 2 years.
2 years and a half.
Not
just 2
and
years.
half. Yes, 2 years and half.
Yes, 2 years and a half. This
and then yearly, this 1,800 is per year, right?
Yes, depreciation per year.
Yes, so
you
2 years.
The number of years. It's simple. You have depreciation for a year. You need the accumulated depreciation for 2.5 years. You multiply by 2.5 years, and you get your accumulated depreciation.
So that's why they put 2.5.
Yes, 2.5. It means 2 years and 6 months. If you say it about months, it means it 6 over 12. Right. 6 over what?
Okay.
Over 12, right. So 6 over 12 equals to 0.5. You see, 6 over 12, it's like 2 plus 6 over 12, right? So 6 over 12 equals to 0. What? 0.5.
Okay. I see. Okay, sir.
Hope you got.
Hello.
Yes,
sir. I got you. Okay, I got you. Yes. Now we are moving together.
Okay, that's cool.
Yes.
So you'd have the carrying amount of 13,500.
500.
Then from that moment onwards, you'll have to apply IFRS 5, non-current assets held for sale and continued what? Operations.
This operation.
Yes. So at that point, then we say that you compare it to the fair value less cost to sell, and you take the lower, right?
Yes.
How do we get fair value less cost to sell? You take your fair value. How much was it?
Minus cost 14,200.
Cost to sell?
Minus 900.
That's good. So just deduct there, and you have your 13,300, right?
Yes.
So you have to compare. So you have 13,500, the carrying amount, and 13,300, right?
Yes.
Then what takes place now? You have to take the lower.
The smallest, yes, lower
which is
amount.
13,300. This one.
Yes.
100. So now you look. In the books, I will be having the carrying amount of 13,500 what? 100.
500.
Yes, that's what I'll be having, right? So
yes,
it means I will have to reduce it by how much? By 200, right?
Yes.
Yes, I would have to reduce by 200. And so what would I do then? I would say remove
credit.
15,000. Yes, credit.
Yes, you credit a non-current as
held for sale.
Hold for non-current hold for sale, and then you debit.
No,
or you
remember.
credit.
Okay.
Yes, you credit it by 13,500.
Listen, right now we have the PPE. The asset is in PPE. Remember, we are moving from PPE to held for sale. You get the point? It was
Yes, you are right. Yes.
So we credit
13,500.
And then we debit.
And then you debit held for sale.
Yes, let me just write
13,
H. Held
okay.
13.
13,300.
Uh-huh.
And then
The
you
balance.
debit
Uh-huh.
the balance of 200, you debit it to profit or loss.
Very good.
And
0.2. You see
this
that?
will be under, yes,
Profit
it
or
will be
loss?
under, it's a loss.
Yes. So you see that that's what you'll be having. And just like I told you, if it's a loss, you can just combine it, right? You can just combine it with the
Yes,
with the impairment losses the asset had ever undergone, so that whenever maybe there is a gain in the future, we say the gain should go up, but it should not exceed the total previous impairment loss, and that loss on the date of what? Of change of classification as held for sale. You can just be having it.
okay.
So you're told the impairment loss of 200 is incurred, and writing down the equipment to fair value less cost to sell, and they'll be charged with statement of
To
profit
sell.
or loss. The machine will no longer be depreciated once you reclassify it, right?
Yes,
In the accounting treatment, you also say the machine will no longer be a non-current asset. It will not be a current what? Asset.
a current asset.
Yes, simply speaking, if you do explain that double entry, everything would be fine. You would say the asset would be recognized from non-current asset, and it will be recognized as a current what?
Current
Held
asset.
what? For sale.
Current asset.
Yes. So it's just that
Current asset held for sale. Okay.
great, great. Okay.
Wow, this is
Then
nice.
okay, then let's go to number 2. Number 2, what does it say? It says repeat question 1 above. Repeat question 1 above. If the equipment was held under evaluation what? Model.
More
What if you are using the revaluation model? What would you have done in that case, right? What would you have done under that what? That case. This is question is very, very
and
important here. And you would see. Look now, under the principle of is to compare the carrying amount against the what? The fair value
the
less
fair
what?
value
Yes, cost to sell. You see. But
cost.
now
So
look here.
yes,
In case you are measuring your asset under revaluation model, it means that just before doing this comparison, you have to classify your asset. You have to use to apply I-16, right? You see the
okay.
problem there. So since you have to apply I-16 even before that, this usually happens, and it is very common. You should get to know it, right? So come and see here. I think you can see. Do you remember do you see what we did here? We got our costs, we deducted the accumulated
Yes,
depreciation, and we got this one. This is what you usually do too.
yes,
If your non-current asset was measured under evaluation model, this is always not the end. We usually have to compare the carrying amount, and we change it to a revalued what? Revalued amount, right? And what is the revalued amount?
okay.
It's 14,000 what? 100. It's a fair value, right? So if you are
Yes,
that the asset was measured under the revaluation model, you would say this is my fair value, so I have to change 13,500 to 14,000 what? 200. You see this?
200.
If you did this,
Okay.
you would have obtained the revaluation gain. The revaluation what?
Yes,
Gain.
gain.
Of how much? 700. Right.
Oh,
14,200 minus 13,500. You see that?
yes,
Okay, now you can see now this difference. So that's why you are
yes,
taking off here that under revaluation model, you would have to revalue the asset first. And then you would have that figure, 7 what? 100, which would have been a
100.
revaluation gain, and it would have been recorded in revaluation what? Surplus. It will go to other comprehensive
Surplus
income and then the revaluation.
income.
You see that?
Yes,
Yes.
yes, sir.
And then after that, you would compare. Now you would say, okay, I'm done with I-16. I'm going with IFRS 5. And IFRS 5 now, this carrying amount would have changed now. It would no longer be 13,500. It would be that fair value, right? Which is 14,000
Yes,
to what? 100.
400.
Yes. And then it will be the time to compare now. So you'd still compare against the fair value cost. So you see, it's like you are repeating it. Eh? So
Yes,
you'd still compare
14,200
200 minus that fair value.
minus 900.
It was 900, yeah?
Yes,
Yes. You see now, so that's why when for the assets under evaluation model, of course, you can see the difference. Obviously, it should be 900, right? because this one and this one is 14,200 cancel, and it would remain with 900. So you can see that fair value less cost to sell is usually the difference when the asset is in the under evaluation model. You see that?
Model.
You see that?
Yes.
So, no, you say, okay, what is this now? What is happening? That is the reality. So we are told the impairment of 900 arising from writing down the new carrying amount of 14,200, which is here,
Yes.
less cost to sell, would have been what? Recognized. So you can see what would have happened. You can see all this, right?
Okay.
Yes. So I think this is also important, and you should well understand it, right?
Okay.
Okay, that's all. I think maybe you can let's just get. I need us to get an example on this. Wait, and we get an example. I want us to get a certain example.
Okay.
Wait. For this one, I think we may just go through it. For this purpose, it's no issue. Let's just go through this. This is just a weighted question. It says
Okay.
MM is preparing its financial statements for the year ended 31st December 20x7. It's fine. On 1st December 20x7, okay, it is almost 1 month before the year end, right?
Yes.
The entity got committed to a plan to sell a surplus office property and has already found a potential buyer. The conditions are shown here, right? The entity is committed.
Yes. Committed to
Potential
a plan and the potential buyer.
So you have to state this. On 15th December 2007 now, a survey was carried out and it was discovered that the building had dry rot and substantial remedial work would be what? Necessary. You see that? Substantial remedial work was necessary.
Yes.
Even at this point, we say that the asset should be ready for sale in its immediate what? Condition. Should be immediately ready for sale in its present condition. You can see the building had dry, right? A dry rot. And so there was
Yes.
substantial remedial work to be carried out. So the asset wasn't ready in that one, in its condition, right?
Yes. Yes.
The buyer is prepared to wait for the work to be carried out. Okay, it's fine, but the property will not be sold until the problem has been what? Rectified. So you say that it cannot be sold until the problem has been rectified. So you have to wait. This is not expected to occur until the summer of
Not
20x8.
has
So
been.
the buyer is going to buy, but it can do that until the summer of 20x8. What is now? Today is just December. So you are told that you have to wait until the summer of 20 what? X8. So you have to decide, can the property be classified as held for sale? So you can see you are asked this question to
No.
they know so that they know that you are following those principles or you are just trying to guess, right?
Yes.
So yes,
No, it's not supposed to be classified.
okay.
Okay. It's not supposed to be classified as read for sale because we at the beginning we saw what we are supposed to classify. The asset is supposed to be ready at its condition, at
Yes.
its present condition when we
Yes.
decide to sell it.
Yes. That's good. That's great. So you point out that point, and in an exam, for those conditions which are fine, you also mention them. You tell them, okay, the question starts well, the conditions start well. We are told the buyer is being located. We are told the management is committed. It's fine, but unfortunately, right? That other
Okay.
condition fails.
Okay.
You speak it so that they know. Okay, this person knows what they are doing, right?
Okay.
Yes. So I
Okay. Okay, sir.
think you have to be
Okay.
careful on such kind of matters, right?
Okay. Yes, sir.
Okay, I'm trying to check something. Okay. This is just a repetition. I'm just trying to look at another question here. Let me pause. Let me pause and look. I'm trying to look at this. Okay, so this question is just like the previous. Okay, no problem. Let's just go on. It will be nice for everyone.
Hello?
Yes, yes.
You've gone, sir.
Hello?
Yes, sir. Now we are back.
Okay. So this question of this, I think this question will come and do it very late. This is a very nice question, this one. I just put the solution intentionally here. After doing all the question, then you come for this. It's a very, very good question. It shows a lot of things. Of course, you don't have to deal with all of them like this. IS-34 interim financial reporting, you don't do this, right? But it won't matter. You just focus on what you have studied and everything would go on. It's a very, very fine question. You will like it.
Okay.
That's what I just decided to put.
Okay.
Let's do question number 7, yeah? Yes.
Okay.
Okay, this question now, let's read the requirements a bit. It has a statement, so it's long. Required, draft a statement of profit or loss for the year ended 31st March 2026 and explain how IFRS 5 discontinued operations. Presentation can make information more useful. The users of financial what? Statements. Okay, let's read. You have to know what it entails. Of course, since we are dealing with this, I think it should obviously be discontinued operations. Okay. The question says, Vel produced cards and sold roses, right? It's fine. However, halfway through the year ended 31st March 2026, it means the year started 1st April 20x5, right? The rose business was closed and the assets sold off, incurring losses on the disposal of non-current assets of $76,000 and redundant costs $37,000, right?
Yes.
Oh, this is the loss on what? On disposal, loss on
disposal.
But also, we had the redundant cost. You know, when you discontinue the operations, it means you have to honor the contract of the workers, right? So you may find yourself incurring redundant costs. Okay, and then you're told the directors reorganized the continuing business at a cost of how much? 98. So in order to proceed with the business, there were reorganization costs. And so trading results, maybe, you know, when you discontinue some operations, it means maybe you may have to rearrange the staff and what, right? So you pay off, you pay those who are going out, and maybe you try to rearrange the matters first to proceed well. So trading results may be as follows. We are told that Val produced the cards and sold what? Roses. So roses. But also we have the what? The roses, right? Of course, it have been produced and sold. Okay, it produced cards, but also sold them. Cards were also sold, right? We can just produce. So we have the revenue for cards and roses. We have the cost of sales for both, distribution cost for both, and as well as administration what? Expenses. Okay, going down, other trading information to be allocated to the continuing operations is as follows, right? Yes. Finance cost here, $17,000. Tax, $31,000. You know, you have the thousands here, right? Yes. So we are told to draft the statement of profit or loss for that year ended. Now you can see, you see now. So we are dealing with cards and what? And roses. However, half the year ended 31st March. The rose business was what? Closed. So the rose business was closed. You see? So this is what discontinued what? Operation. Yes. We said it is a component of an entity that has either been classified as held for sale or disposed, and we are given the three different possibilities, right? Yes. This one is not held for sale, but obviously it should have been disposed because it was closed, right? Yes. Yes. And so we say that to call it a component, you can't just dispose anything and call it a component. You say you dispose unless it is called a component. No, it should form a major line of business. Probably, yeah, it forms a major line of business. You have 2 lines of business, cars and roses, right? And maybe you're closing
Yes.
you need to see, look, the revenue of roses is almost 50%, a half of cards. It's obviously a major line of business too, right?
Yes.
Yes, or maybe it should be a part of a single plan, coordinated plan. Of course, they haven't mentioned it here. Or maybe it is a subsidiary purchased for the aim of resale, not mentioned. Right. So okay, this is fine, and they could proceed. So cards would be on the continuing operations, while roses will be on the discontinued what? Operation.
Operation.
Very simple. So you start with continuing operation and you state everything for cards, and you look above here for the costs or revenues or maybe any income that will be related to the continuing operations. Now, reading up here, we have the loss on disposal. Oh, loss on disposal is obviously involved in a discontinued operation, right? You are having the yes. But also because you have disposed the item that you are no longer in the business, so it's under discontinued what? Operation. Redundant.
Operation.
You would have to say about redundant cost. You are paying the people whom you did what?
You lay off.
Okay. And then you have this reorganization cost. You reorganize because you want to start up again. So those will be on the continuing what? Operations, right?
Operation.
Cost of
Yes.
organization, yes. So you come here and take these figures for what? For cards, which is the continuing operation. So you just come here, you show your draft statements, you write here continuing what? Operation.
Operation.
You have the revenue, you can just look it up there. Let's just look it up. Revenue 650, cost of sales 320, right?
320, yes.
So revenue 650, cost of sales 320. You deduct and you get your gross what?
Profit.
320, that's fine. And then you proceed up here. And we have the what? Distribution costs.
Distribution. 60.
Expenses 120.
120.
Yes, so you just come here and put them. Admin here, and you have the distribution, right? Did I put admin was 120? Okay, it's fine. After this, if nothing else is specified, you go on and all right. You can have the operating profit. It's fine, which is 330 minus 120 minus 160. It should be 150. That's fine. And then you have the reorganization costs now, right? Like I told you that the reorganization cost, you reorganize because you want to proceed with what? With your business. So reorganization cost here was how much?
98,000.
And then you are told other trading information to continue operation. You have the finance cost at 17,000 and tax at what? 31. So everything has been computed. You just need to arrange them.
Okay.
So you have the reorganization cost at 98. And so we take your operating profit 150 minus 98. And we have how much? 52,000. Then we have the profit before interest and tax. You have our finance cost.
Yes.
In which interest should be there. 17.
Yes.
We deduct 52 minus 17. We have 35. We should be the profit before what? Before tax. And then we charge our tax expense, which we saw as how much? 31.
31.
31, you have the 4 and 4 is the profit for the year from continuing what?
Operation.
Yes. So after that, then now you proceed with discontinued. So you can see it's just like you just separate them. Right?
Okay.
Yes, just this. Sir. Okay. And if you go to the principles, we say that for discontinued operations, right?
Yes.
You can have the loss. You're told that the loss for the year from discontinued operations, it's 143. But we said you have the choice. You could decide, instead of writing all this, you could decide to write down this one. You see this item, revenue and cost of sales. If you just write like you have shown here, this one won't be sufficient, right? If you just do it this way, it means you will have to go to the notes and disclose these items here. Like you can see, disclosure in the notes for the discontinued what? Operations.
Operation.
Same too. Yes, you do the same. It is the rose business that was what? Discontinued. So revenue,
Discontinued.
cost of sales. Revenue is how much?
320.
Cost of sales is how much? 150.
150.
Yeah, so just go there, just go down and put the revenue 320, cost of sales 150. You deduct, you get your gross profit. Then after you go for the admin costs and
Sorry, where did we remove these discontinued operations?
Why?
143 and 139.
No, don't deal with this one. Just leave them. I told you that you have two choices. You either go for the line, you do in the disclosure, then you just come and put the figure here. But you could decide. You could do it this way. Presume that we didn't do it this way. Presume that we haven't written
They're not there.
Oh, yes.
Okay.
And because it is allowed, you could just put it here, right?
Okay.
Yes. So let's go for the admin costs and the distribution what? Costs. What is admin cost?
Distribution cost.
Distribution
110. 110.
110.
Administration and 10.
110
yes.
and 90, right? So you have them 110 and what? And 90. 110 plus 90 is 200. 200 deduct the 170, you have a loss of 30, right? Operating loss. If you have a loss, you don't expect to have the tax here, right?
Okay.
So you proceed on the rest of the costs now, right? Which other costs did we have related to the
finance cost?
No finance cost. Those finance costs were for continuing operations.
Okay.
Yes. Okay, now you can see it up here. We are provided as a loss on disposal. We have to put here something on disposal, 76,000, but also the redundant what? Redundant costs. So you also put them there because they are related to the discontinued what? Operations.
Operations.
Loss on disposal. Even if it was a profit on disposal, you'd put it. Then redundant 37. So yeah, how much total costs? 147. I'm taking 76 plus 37 is 113, right? Loss 113.
Yes, 113.
Plus another 30 here, 143. You see that?
Yes.
Overall loss, and that's what we are seeing here, right? So, So if you just decide to put here this figure, you would have to show the workings on how you arrived at that, right?
Okay.
Yes, you show the workings on how you did what? You arrived at that. Or you may decide just to show everything on the face of the financial statements. Some other people would say, okay, this is discontinued operation. Maybe I don't need to explain everything in the face of the statements because it would no longer be there. So they decide just, okay, let's just say maybe we had this profit or this loss because people should not be so interested in it. If they are so interested, they should go to the disclosures, the notes, right?
Yes.
And so you'd see, okay, on continuing operations, I had a profit of 4. On discontinued, I had a loss of 143. For profit of 4 and loss of 133, we have a net loss of how much? 139. You see that?
139. Yes, sir.
Yes, you do that and everything gets well and well and well. So it's just that way. And it's good that today it's your lucky day. Everything is done. Hey, my friend, you are so lucky today. You haven't reached even 2 hours. Today you are lucky. You know, when you have some days like this, you use them well. After this one, if you have the time, you just do whatever you can. You know, that's why I don't need to get too much because yes, I could have said, okay, we have just done this little time. Let's do another thing. No, it's not right just to combine matters and just combine just for the sake of completion. I think you also have the time to digest and what. So when you get this time, you try to use it well, right?
Yes, sir. Yes, sir. I'll use it.